Imagine a bubble so massive that it's filled with stocks, real estate, cryptocurrencies, bonds, and even foreign art. Now imagine that bubble stretching thin, so thin it's about to burst, sending shock waves through the entire economy. Well, that's not just a scary story. Warren Buffett, the oracle of Omaha, is raising the alarm. So today we're going to break down what the everything bubble is, why Warren Buffett believes it's about to pop, and what you can do to protect yourself before it's too late. Number 1. The rise of the everything bubble. Over the past decade, we've witnessed a phenomenon that's left even seasoned investors shaking their heads in disbelief. Imagine this: everything from stocks and bonds to real estate, cryptocurrencies, and even foreign art has seen prices skyrocket to unprecedented levels. This isn't just a stock market bubble or a housing bubble, it's what experts are now calling the everything bubble. And Warren Buffett, the oracle of Omaha, has been watching with a wary eye. This surge began after the 2008 financial crisis, when central banks flooded the economy with cheap money. Interest rates plummeted to near zero levels. It was like handing out endless credit cards to the world. Borrowing was easy, and risk felt like a distant memory. Companies took out loans to buy back their own shares, pushing stock prices higher. Home buyers rushed in to grab cheaper mortgages, sending real estate prices soaring. Investors, desperate for returns, poured money into everything from tech startups to digital assets. Everything was inflating all at once. Take Tesla, for example. In 2019, Tesla's market value was around $45 billion. By late 2021, it had exploded to over $1 trillion. The car company's stock price increased tenfold in just 2 years. This wasn't purely about car sales. It was fueled by the belief that everything tech-related could only go up. Investors believed they've found the golden goose, but Warren Buffett knows better. He's seen bubbles inflate and pop before, and it's not just stocks. Real estate saw a similar frenzy. In places like Austin, Texas, home prices shot up by 50% between 2020 and 2022. In Canada, the average home price soared beyond $700,000, driven by ultra-low rates and speculative buying. People began seeing houses less as homes and more as quick investments. But Buffett warns that when speculation overtakes value, trouble is brewing. Even cryptocurrencies, a market that barely existed 15 years ago, saw an astonishing rise. Bitcoin went from $3,000 in early 2019 to nearly $69,000 in 2021. People mortgaged their homes and raised their savings to buy in, but as Buffett often says, when the tide goes out, you see who's been swimming naked. This is what makes the everything bubble so dangerous. It's not one isolated sector, it's a domino chain. If one asset class collapses, it will trigger a cascade. And history tells us that when bubbles burst, they don't pop gently, they shatter. Buffett's warnings come from a lifetime of experience, and if his concerns, it might be time to brace for impact. If you're enjoying the video, hit the subscribe button and comment down your thoughts. If you want to explore money-making strategies, click the link in the description to start your financial journey. Number 2. Why Buffett believes the bubble will burst soon. Warren Buffett has a unique ability to see cracks forming long before they widen into chasms, and right now he sees those cracks spreading rapidly through the economy. Why does Buffett believe that everything bubble is about to burst? The signs are everywhere, and if history is any guide, we are teetering dangerously close to the edge. One glaring reason is that cheap money, the fuel behind this bubble, is vanishing. After years of near zero interest rates, central banks have been forced to slam on the brakes. Inflation surged, reaching levels we haven't seen in decades. In the United States, inflation peaked at 9% in 2022, eroding the dollar's purchasing power. To combat this, the Federal Reserve began raising interest rates aggressively. And as rates rise, the era of easy borrowing is ending. making it more expensive for companies, home buyers, and investors to access money. Buffett knows that when the money supply tightens, inflated asset prices start to deflate, sometimes violently. Think back to 2000. During the dot-com boom, internet stocks were soaring on wild promises and wishful thinking. Companies with no profits, no clear business plans, just dot-com in their name, were valued in the billions. Buffett warned investors at the time, saying the market was built on speculation, not value. When the bubble finally burst, the Nasdaq lost nearly 80% of its value. Companies vanished overnight, and trillions of dollars evaporated. Besides that are eerily similar to what we are seeing now. Tesla, cryptocurrencies, meme stocks, many are trading on sentiments, not substance. Buffett also points to corporate debt as a ticket-time bomb. During the era of cheap money, companies borrowed excessively. By 2022, U.S. corporate debt has surged to a staggering $11 trillion. Many of these businesses are surviving on borrowed lifelines. But as interest rates rise, the cost of servicing that debt grows, squeezing profits and, in some cases, pushing companies towards bankruptcy. The same thing happened in 2008. Household debt combined with easy credit created a housing bubble that detonated the global economy. Buffett remembers the pain, and he sees shadows of it today. Additionally, Buffett's careful watch over market valuation metrics tells a worrying story. One of his favorite indicators, the Buffett indicator, compares the total stock market value to the GDP. When this ratio goes far beyond historical norms, it signals that markets are dangerously overheated. In 2021, this ratio hit an all-time high of over 200%, a clear warning sign. Buffett believed that markets can only defy gravity for so long before reality pulls them back down. All these factors, rising rates, corporate debt, and overvaluation, form a perfect storm. Buffett has seen this movie before, and he knows how it ends. The question isn't if the bubble will burst, but when, and the answer might be sooner than most people expect. Number 3. How to protect yourself from the everything bubble. When Warren Buffett senses danger in the market, he doesn't panic, he prepares. And right now, he's signaling that the everything bubble is about to pop. But what does preparation really look like? Buffett's time-tested strategies can help you protect your wealth and maybe even thrive when everything else falls apart. First, Buffett is a master of one simple principle: owning real value. During times of uncertainty, he focuses on assets that have intrinsic worth, companies with strong fundamentals, reliable cash flows, and products the world genuinely needs. Think of Coca-Cola. Buffett first invested in the company back in 1988, during the aftermath of the market crash. While other investors scrambled to sell off risky stocks, Buffett doubled down on this timeless brand. Why? Because no matter the state of the economy, people will drink Coke. This kind of investment offers a buffer against market volatility. In today's overinflated markets, Buffett urges you to seek companies that produce real goods, not hype or speculation. Another powerful way to protect yourself is to have cash, and lots of it. Buffett's holding company, Berkshire Hathaway, is famous for its massive cash reserves. In early 2023, Berkshire had a staggering $130 million in cash and cash equivalents. Why sit on that much cash? Because when the bubble bursts, cash becomes a weapon. It allows you to seize opportunities when others are forced to sell in a panic. During the 2008 financial crisis, Buffett's liquidity allows him to invest billions in struggling giants like Goldman Sachs and Bank of America, deals that paid off massively once the economy recovered. He was able to buy these businesses at fire sale prices because he had the cash ready to strike. Another essential strategy is to limit debt exposure. Buffett has always warned against borrowing heavily to invest, especially when markets are overheated. Imagine someone who leveraged their investments in tech stocks during the 2000 dot-com bubble. When the crash came, the losses weren't just painful, they were catastrophic. If you've taken on debt to invest or finance risky ventures, now might be the time to scale back. In Buffett's eyes, staying debt-free is the ultimate form of financial freedom during a crisis. Also diversify intelligently. While Buffett prefers to invest heavily in companies he deeply believes in, he also emphasizes not putting all your eggs in one basket. If you are heavily exposed to tech, crypto, or other speculative assets, it's worth reassessing. Holding a mix of reliable stocks, bonds, and even precious metals like gold can serve as a hedge against collapse. Buffett doesn't fear bubbles, he respects them. He knows that every bubble's burst is a moment of chaos, but also a moment of opportunity. Those who prepare wisely with cash in hand, solid investments, and little debt won't just survive the everything bubble. They might emerge wealthier than ever. If you like this type of content, then press the like button and subscribe to our channel.